Is BABA breaking down, or is it backtesting demand before the launch of its next markup campaign? I'm Brent with Trade Therapy. Welcome back to the Trading Couch, Sweet and Clarity. We spotlighted BABA, and once again, we find ourselves in the position of evaluating whether or not this is a demand backtest or a breakdown, similar to what we were looking at with Tesla last week. Before we get into the charts, quick disclaimer: this video is for educational purposes only. It's not investment advice. Trading involves risk, including the risk of loss. Always trade according to your own plan and your own risk tolerance. Full disclosure, we are long BABA and BABX. But we started with the monthly view. We always start with a high time frame to give us an overall view of how the trend is doing. And similar to Tesla last week, BABA is not a stock that's trying to work its way out of a bottom or out of the lows. The hard work's already been done. It's already done that. We look back, we can see the full institutional cycle of accumulation, reaccumulation, and then distribution down into redistribution, and then accumulation down here at the bottom. We now see BABA breaking up out of that, getting up into the upper range of its all-time chart here. So it's not a stock that's trying to break a downtrend or trying to reestablish itself after a big washout or after a big distribution markdown. That's already been done. The issue now is not whether BABA can rally. The issue is whether the current pullback is simply reaccumulation in a much larger bullish sequence, or is the market signaling that it needs more time? The key point in the monthly is price is no longer accelerating vertically out of this. It has broken down. We do see a pretty clear ABC right here coming off of a demand line with bullish divergence on a very high time frame. Like a monthly chart, that divergence can show up at any time. So it's not really something we want to trade off of, but it's something we want to take note of. And so price is no longer accelerating vertically off of this low. We now have a more mature leg, backtesting demand and backtesting these moving averages. You see the red 55-month exponential moving average is providing support here. So it looks like it's being supported. We need to see whether or not demand steps up as we go through this week. This week, we are expecting some volatility associated with the war in Iran. And so we'll see how demand holds up. In Wyckoff terms, this is what reaccumulation looks like, because off of the lows, Wall Street's going to be taking profits off of this impulsive structure that just completed right here. They take profits up into this pivot right here. And now they're coming down and refilling their positions down around this all-time support line. And that refreshes the campaign. It cools sentiment, transfers stock out of weak hands to strong hands. Now that's done, we'll have to see if enough of those shares have transferred into stronger hands to support the next leg of the campaign. Price is pulling back into this rising trend framework. So it's not breaking down at this point. It's not rolling over. The shorter monthly moving averages have come down, but the longer ones are still rising and supporting. So we'll want to watch and see if BABA can retake them and start converting the shorter term falling averages into supportive. So this keeps the long cycle posture is still constructive. Short term feels a little less so because we've had a pullback, but this is still constructive. We do see the demand line holding. We do see the long-term monthly moving averages supporting, and we do see divergence. All of those things lead to a constructive chart. If we jump over to the weekly is interesting because it really details the first real, true, strong backtest of demand. We've seen as BABA has come up out of this accumulation range, we've seen these really sharp pullbacks. And once again, like we saw last week with Tesla, you see the initial pullbacks very sharp, almost straight down elevator drops. And then as BABA started getting more and more mature out of this accumulation range, you see these drawbacks starting to get flatter and flatter. This is the first real backtest of demand with a full ABC corrective wave down into the 200 weekly exponential moving average right there. It's not bearish to see demand backtested. This is normal. This is healthy markup campaign activity. Healthy markup campaigns don't fail because they're backtesting demand, or they don't fail because they're not going straight up. It fails when these pullbacks stop finding support. So if BABA continues to fall down and lose the 200 weekly exponential moving average and fall beneath this 382 fib, and start battling, trying to hold 100, and we start seeing it trying to recover, but rejecting back down in this direction, then we can say that the markup campaign is failing and BABA's experiencing real trouble. Right now, Baba's sitting exactly at the point where demand should be stepping in and supporting. We did see last week Baba reacting off of this 200 weekly exponential moving average. So far, the weekly is still living inside this bullish scenario where we're still seeing higher highs, we're still seeing higher lows. We're seeing price beginning to back up into this rising weekly trend line. And once again, we're seeing divergence developing on the momentum indicator. So all of this is normal behavior during a real test. The more important issue is whether or not this weakness stays contained near the upper ranges of this accumulation structure. Baba is now trading back into the area where prior business was really done. You can see on this pullback, there was a lot of accumulation happening right here, right across the top of the range, right at this pivot previously. When price was trying to get up into this area, it was rejected. Then once it got above it, it's starting to find support in this general range. If we have the volume profile up, we probably see that price broke down underneath this volume shelf right here and got underneath it to take all of these people out that have their stop set there. So this all looks normal. This all looks healthy. This is where supply should really start drying up and demand should start showing up. We're probably starting to see some tighter spread candles here, maybe some reversal candles here, a doji or something, indicating that supply is being absorbed, demand is back in, and Baba's ready to continue with the next leg of its campaign. If that type of behavior does not show up, then this is not just a routine backtest. It means that the prior markup leg may have run too far, too fast, got out ahead of its sponsorship, and it needs a larger repair. If we jump over to the leveraged BABX chart, we did include the leveraged BABX chart this week because it gives us an instantaneous view into institutional positioning and how aggressively institutions are positioning within BABA, whether they are adding some leveraged long exposure into their positions. And when we look at it, we can see that BABX has also gone through a full three-wave correction where supply really took over and price was driven down underneath this volume shelf. This is what I was talking about within the previous weekly chart on BABA, where you can see price come down underneath that shelf to take all of these people out of the trade. You can see that it's coming down into an area where it likely will see support stepping in. We can see higher volume coming in down at the bottom. Again, this is all healthy type of demand back test behavior. We do see buyers responding. We do see the range expanding off of the lows. These closes are getting better. We're seeing RSI getting back up to the top of the range. This is a daily chart. So we're seeing the type of reaction to this pullback that we would expect to see if institutional desks were adding additional long exposure to their BABA holdings. That's how they use these leveraged funds. We're seeing that kind of behavior off of this low. So that tells us that they're not abandoning the trade. They're adding to it. If BABA was breaking down, if BABA was distributing, we would most likely not see the leveraged ETF BABX responding off of the low, because if it was distributing and breaking down, institutions would not be adding additional exposure to it. If we look at our volume profile, we do see a little bit of a pocket here. It is possible that we could see acceleration if demand continues to step in. We could see BABX get up to the top of this volume pocket and get back up into the bottom of the structure around the 0.5 Fibonacci at 37.91. That's what it looks like. So this leveraged read is also constructive, like we saw in the monthly read, but it's not fully confirmed. We're going to need to see price get back up above this longer term moving average, get back beyond just the bottom of this market structure, beyond this 0.5 Fib, and get up and start getting back into the habit of setting higher highs and higher lows. So I would expect to see price get up in here and then backtest the then rising moving averages and then come out and begin to start setting higher highs and higher lows and beginning to form the next leg of the campaign. If it does not, if it gets up here and is rejected off of these longer term moving averages and gets down and tries to recover and rejects from that, again, that's our bearish scenario. And that Baba's going to need more time to build up some more sponsorship. If we jump over to our last Baba chart, our daily chart, We see the same things we were looking at in the monthly, the weekly, and BABX. We see a 1, 2, 3 corrective wave pattern here, which is wave 4 in our larger, higher time frame count. We do see a little impulsive wave structure trying to form here. Price did get up to the 200-day exponential moving average as of last Friday. It likely will pull back and again backtest some of these rising moving averages before continuing up, and we'll see what sort of a wave 5 would develop from this micro count. This would represent wave 1 of the higher impulsive structure that is building out. So if you look at wave 4 here, which is ABC, you can see that there's these smaller subwaves. That's what this is. It's the subwave, wave 1. So we'll be watching it to see if we get that pullback for wave 4, pulling back and testing these moving averages here before it extends up and continues on. It's interesting because we can see that price has gotten back up into this pocket within the volume profile. If it's going to turn back down and head lower, this is likely where we're going to see it turn back and head south at the 200 daily exponential moving average. And once it gets up into the pocket of the profile, there's really not anybody here. You can see these big gaps. You can see that there's not a lot of candles closing around here, very different than a range like this, where we see structure all across this range. There's a lot of support, a lot of congestion. You get down into these volume pockets and you see these lots of gaps. That means price can move very quickly, either up or down through those ranges. So something to keep an eye on if demand shows back up and BABA starts improving the quality of its closes. We talked about what an improvement would look like on the weekly. If we start seeing stronger closes, we start seeing signs of demand showing back up, then we would look for BABA to move quickly through this range and get back up and start working its way through all of this congestion. So if demand shows up, that next recovery leg can move a lot faster than a lot of people are expecting because there's less overhead inventory here to slow it down. That's the bullish path. The bearish path is also pretty clear, and we've talked about it. If it starts breaking down and falling beneath these longer term moving averages and cannot recover and its recovery attempts start failing, if it starts moving down towards the 120s, that'll tell you that the campaign's asking for a deeper repair and institutions need more time to expand their exposure again before they're ready to continue on with their markup campaign. So to wrap this up, we're going to jump back to our monthly chart. The monthly tells us that the cycle is still in a constructive position. This is a very constructive looking chart. It's just a reset and it's just demand back testing with some profit taking. The weekly really gives us the same kind of indicator that the back test is live. It came down, touched this longer term moving average, and is starting to bounce off of that. This also leans constructive. BABX shows that leverage participation is also still constructive. We're seeing it bounce off of the low here. So institutions are still adding long exposure, but we want to see confirmation on it. And then lastly, the daily is showing that demand is now starting to show up exactly where it needs to, exactly where it should at those longer term moving averages in our higher time frame charts. And we can see price pushing up into this volume pocket, right? That also sets up well for a very quick continue if the market's ready to push it forward. And we talked about what the bearish case would look like here. So this is what real institution backtests usually look like. Retail investors always think it's breaking down. They think the cycle's broken. They think that BABA is going to fall apart, and they start buying into all the negative China narratives. That's not the case. It's just an institutional backtest. They don't feel clean. They don't feel comfortable. They force traders to decide whether they trust the structure before the next move becomes obvious. That's all the time we've got for BABA this week. We'll see you back here on the Trading Couch next week.